From the bustling markets of medieval Europe to the intangible streams of digital currency, the story of banking is the story of human innovation, ambition, and the enduring quest for prosperity. It is a tale that begins not in grand halls of finance, but with a brotherhood of knights and the needs of pilgrims on a perilous journey. In the 12th century, the Knights Templar, a powerful religious military order, established a system to safeguard the wealth of pilgrims traveling to the Holy Land. This was more than just storage. It was an early form of banking that allowed travelers to deposit their assets in one location and withdraw them in another, using a letter of credit. This innovative network laid the groundwork for modern international banking. As Europe entered the Renaissance, the center of the financial world shifted to the Italian city-states of Florence, Venice, and Genoa. Here, powerful families rose to prominence not through warfare, but through commerce and finance. The most famous of these were the Medici family of Florence. Founded by Giovanni di Bicci de' Medici in 1397, the Medici Bank revolutionized finance. They pioneered techniques such as double-entry bookkeeping, which is still a cornerstone of accounting today. The Medici Bank became the most important financial institution in Europe, with branches in major cities and even serving as the chief bank for the Roman Catholic Curia. The 17th and 18th centuries witnessed the birth of modern central banking. The Bank of Amsterdam, founded in 1609, and the Bank of England in 1694 were established to stabilize their respective economies and manage government debt. These institutions laid the foundation for the central banking systems that are crucial to global financial stability today. The Industrial Revolution in the 19th century brought about a new era of banking. The rise of joint stock banks allowed for the pooling of capital from a wider range of investors, fueling industrial growth and infrastructure projects. This period also saw the expansion of banking to the New World, with the founding of institutions like the First Bank of the United States in 1791. The early 20th century was a time of both incredible growth and immense turmoil. The creation of the Federal Reserve System in the United States in 1913 was a landmark event designed to provide the nation with a safer, more flexible, and more stable monetary and financial system. However, the Great Depression of the 1930s would test the resilience of the global banking system like never before. In response to the widespread bank failures of the Great Depression, the Glass-Steagall Act was passed in 1933, separating commercial and investment banking. This legislation, along with the creation of the Federal Deposit Insurance Corporation, FDIC, to insure deposits, aimed to restore public confidence in the banking system. The latter half of the 20th century saw the dawn of the digital age. The introduction of ATMs, electronic payments, and online banking revolutionized the way people interact with their finances. This period of rapid technological advancement was also marked by deregulation and globalization, which led to the expansion of banks across national borders and the creation of a more interconnected global financial system. This interconnected global financial system was put to the test in 2008. The collapse of the U.S. housing market triggered a domino effect, leading to the failure of major financial institutions and a severe contraction of credit worldwide. The 2008 financial crisis was the most serious economic downturn since the Great Depression and led to a renewed debate about the need for stricter banking regulations. In the wake of the 2008 crisis, the Dodd-Frank Wall Street Reform and Consumer Protection Act was passed in the United States in 2010. This sweeping legislation aimed to increase transparency and accountability in the financial system, protect consumers, and prevent another catastrophic collapse. Today, we are in the midst of another banking revolution, driven by financial technology, or Fintech. Mobile banking, digital wallets, and peer-to-peer lending platforms are transforming the way we save, borrow, and invest. These innovations are making financial services more accessible and convenient than ever before. The rise of digital banking is not without its challenges. Cybersecurity has become a paramount concern as financial institutions and their customers face the constant threat of data breaches and online fraud. Regulators around the world are grappling with how to foster innovation while ensuring the safety and stability of the financial system. From the simple ledgers of the Medici to the complex algorithms of today's fintech startups, the history of banking is a testament to the power of human ingenuity. As technology continues to evolve at an ever-accelerating pace, one thing is certain: the future of banking will be as dynamic and transformative as its past. The fundamental principles of trust, security, and the facilitation of commerce will remain, but the methods by which they are delivered will continue to be reimagined. Thank you for watching. Please like the video and subscribe to our channel.